This is Craig Haugard with your Financial Issues Ag Update. Well, the spreading of the coronavirus has seemingly pushed all other stories to the background this morning and has commodities trading on their heels in the overnight. The Ag Forum pegged this year's corn trendline yield at 178.5 bushels per acre last week. That was at the top end of the range of trade guesses. The USDA Ag Forum also gave us a projected 2.64 billion bushel carryout. They used a 2.1 billion bushel export program and an annual feed usage of 5.8 billion. The feed number forecast in the forum, if realized, would be the largest corn usage for feed since DDGs were introduced to the U.S. market 12 years ago. Considerable headwinds lie ahead for corn rallies as the Brazilian crop is growing larger with beneficial weather, and China's interest in corn is diminished by the coronavirus and other disease problems. The weekly export sales exceeded all expectations at 49.2 million bushels, although that still leaves us trailing last year by 523 million. As I record this, the overnight spot corn futures are trading 3 cents lower. We had a two-sided trade in soybeans on Friday, but the lack of exports ultimately led to a lower close. Weekly sales fell below the range of expectations at 18.2 million bushels. It's also less than half the amount booked to all destinations a year ago, and market year-to-date commitments are now running 121 million bushels behind last year. In the overnight trade, we're seeing the impact of the coronavirus as we have spot soybean futures trading 9 cents lower. The Ag Forum, world cash prices, export sales, and technical charts all contribute to a negative close in the wheat complex on Friday. The Ag Forum shows carryout in the U.S. shrinking from 940 million bushels to 777 million, but it wasn't by demand, but rather by acreage and yield attrition. The USDA is using a 48.2 bushel per acre yield for now and 45 million planted acres. Feed and residual dropped by 30 million bushels year over year, while they had feed usage remaining nearly unchanged. Weekly export sales came in at 12.7 million bushels, which was below the range of expectations. In the overnight trade, Chicago is 9 cents lower, Kansas City is down 8, and Minneapolis is trading a nickel lower. Cotton futures ended the week on a softer note, with the May futures closing down 37 points to settle at $68.93 per hundredweight. In the overnight trade, spot futures are really getting rocked, trading down 244 points as I record this. Livestock futures had a split session. April live cattle contract finished down 90 cents, while March feeder cattle futures were 60 cents lower. Lean hog futures were slightly lower, with April closing up 15 cents for the day. We had the monthly USDA cattle on feed report Friday, and the numbers were a bit lower than what analysts were expecting. The initial estimate was that the report would be viewed as bullish, but that was prior to the coronavirus news coming out, so it'll be interesting to see how the trade reacts to that. Cattle placed on feed in January at 99.4%, and that was below the estimate of 101.9%. January's marketings came in at 101.1%, which was 0.1% above the estimate, while cattle on feed were at 102.2%, which was 0.2% below estimate. Class 3 milk futures had another losing session, with the March futures closing down 2 points to settle at 16.64. In the overnight trade, we have spot futures trading an additional 8 points lower. Cash livestock markets were all stronger on Friday. At the close, we had choice beef boxes 59 cents higher to close at 205.09, while selects were up a dime to settle at 201.70. Pork carcass values were 56 cents higher as they closed at $65 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.